stock prices, it's driven up bond prices, of course. And so you're going to have a harder time getting that growth moving forward that we've had in the rearview mirror. And if that's the case, then I like companies that can grow in this environment. I like companies also with a bit of a dividend, because the dividend yield now in the S&P 500 not only is higher than the 10-year Treasury, it's higher than the 30-year Treasury. So I think dividend stocks are going to be okay, but I really want to focus on growth areas. And you can use the volatility that you've got right now to buy on support and get rid of some things maybe you don't like on rallies. Now, a lot of people are focusing on the financials here, saying they're cheap. But look, with a really, really flat yield curve across all durations and no expectation of rising rates anytime soon, I think it's going to be very difficult for the banks to have a sustained rally. So I'm not too crazy there. I'd rather focus on growth and or stocks that have a potential to consistently raise their dividend here.
Bonnie, the Treasury Secretary has floated this idea that the administration is again considering the prospect of a super long bond, 50 or maybe 100-year Treasury. Do you guys think there would be demand and something like that could be a successful way to handle the deficit and take advantage of lower interest rates?
Well, clearly it makes sense for the Treasury to investigate this, given the low interest rates and locking in that financing. It all depends on the valuations at which they come. And so when and if that bond issuance does come, we'll take a hard look at it and make a relative value decision.
All right, something I guess we'll continue to talk about. Ask Larry Summers as well, former Treasury Secretary. Jim and Bonnie, thank you.
Thank you.
Thank you.
All right, stocks continue to rally. The major index is holding about 1% gains this morning. But amid the volatility, what stocks hold the key to investor confidence going into September? Our Bob Pisani is here to answer that question. Bob?
Flattish for the year, but not a lot of confidence in the forecast. Just let me show you where we are. I'll show you what flattish actually looks like for the S&P 500 here. That's flattish, 3% down, 1%. That'll be flat. Probably be about 2%. For the year, we're going to be about 2% overall. So what happens in the recession? Everyone's trying to figure out what sectors get hit in recessions. But generally, most of the S&P 500 is down about 20%. A typical garden variety recession that you see here, earnings are down about 20%. Put up the next full screen. Down 20%. The S&P 500, typically price drops around 20 to 30%. Earnings dropped 23% in 2008. So what's going to go on? The problem for the stock market is very simple right now. If you look at, we don't know about the good news here is that earnings are flattish. The bad news is we don't have a lot of confidence in the outlook overall. We don't have a lot of confidence for three reasons. Number one, we don't know about the direction of trade and tariffs. We don't know what's going to happen at the European and Asian economy independently of that. And we don't know what the right policy for weaker growth. Should we just keep cutting rates or not? So let's take a look at some specific sectors very quickly. Here's the ones where you're getting big declines. In energy stocks and materials like Freeport-McMoRan, we're seeing big drops. These are the sectors exposed to the global economy. Industrials are down, but not as much. Most of the time, this is Boeing and Caterpillar that are having the big problems. If it wasn't for that, these numbers would be much smaller. If you look at the consumer sectors, it's not nearly as bad. Consumer discretionaries down 5%. This is compared to what it was July 1st, by the way. I'm talking about how the numbers have changed, not the absolute numbers. Mostly this is because Amazon's had its numbers reduced. But other consumer discretionary have been fine since the beginning of July. Consumer staples, very modest declines here. So if you're talking about key sectors here, I'd say Amazon's a key one to watch. I'd also say the technology space basically has been down about 1% since July 1st. That's a very, very small move overall. And guys, I think the key here is to watch what we're seeing in the semiconductor space. Back to you.
Bob, thank you. Bob Pisani going over all those earnings. When we return, retailers, speaking of earnings, of course, we've gotten a bunch of them this morning, but they're also warning price hikes that just days before a new round of tariffs will take effect. The CEO of Columbia Sportswear says that could devastate the economy. He'll join us next to explain. And later, you're not going to want to miss former Treasury Secretary Larry Summers. He is calling that controversial Bill Dudley op-ed, quote, the least responsible statement by a former financial official in decades.
That's not Larry Summers.
I didn't see the picture.
Ollison, but we'll have him too.
All right. We got them all. We got them all coming right up on Squawk in the Street.
Through the AT&T network, Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Strength and things, strength and things, strength and things, strength and things, strings and things and strings and things, strings and things, strings and things, strings and things.
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Dad, I'm bored.
Why don't you help me hang the washing up?
Don't worry, this summer we've got loads of exciting activities to keep the kids entertained. How about you go explore the Tottenham Hale to Victoria cycle route and go tree spotting on the way?
Whee!
Look online for Asda Tour de Fun to find amazing walks here in London, from lakes and logs to forests and woods, all powered by Sustrans, a registered UK charity. Go discover your fun side with Asda.
For winter?
It is the countdown to September 1st. 15% tariffs are set to go into effect on an additional, well, a lot of Chinese imports. Retailers here will be disproportionately impacted, and among those raising the alarm is the CEO of Columbia Sportswear, who says, quote, "Let's not tank the economy with the misguided conception that trade wars are fun." Tim Boyle, the president and CEO of Columbia Sportswear, joins us now. Mr. Boyle, always nice to have you with us. You've been outspoken on this issue in the past. What are your expectations in terms of what it's going to mean for your business and others who sell apparel and footwear to the American consumer when these tariffs start to take effect September 1 and then others also on December 15th?
Certainly. Well, you know, our product commodities, both apparel and footwear, have been among the most heavily tariffed since the 30s. So we're very adept at operating in a tariffed environment. But this basically rogue application of tariffs coming at a very bad time in the United States is going to be really, really difficult to manage, especially when we really don't know what's going to be happening. So, you know, the president has put tariffs, additional tariffs on products which we're going to be importing from China and from other countries. And, you know, we're trying to manage how we distribute that product inside the U.S., how we divert it to other countries outside the U.S. You might remember Columbia's revenues are about 40% outside the U.S. So we have the opportunity to divert these things, and some product categories just won't be available for retailers. And then there's other product categories and product specific items which will, after the tariffs are imposed, be about 50% of the retail price paid by the consumer will be in tariff and tax.
Right. Mr. Boyle, what do you say to those who say, listen, somebody had to stand up to China at some point. They've taken many of our jobs. They steal our intellectual property. They don't treat our companies fairly in their home market. And in fact, if we're going to do it, now's not a bad time. The consumer remains strong. Yes, this is a tax, but it's one worth paying because it will enable us to get the leverage we need to get the Chinese to play fair.
Well, frankly, we've done business in China for 20 years, and for the intellectual property issues we've had in China have greatly diminished over the last several years. So I don't see the issues that the president talks about. I think it's easy to point fingers at a quote-unquote China as a big bad market, but frankly, it's a big market for us. It's one of the biggest geographic opportunities for our company, and I don't see why the Chinese consumer needs to be focused on as a bad person or a bad entity. We've had great relationships with China, and frankly, if you think about how the American consumer goods have been sourced since World War II, most inexpensive goods sourced for the U.S. market came from Japan right after the war. That production moved to Korea and to Taiwan when prices in Japan elevated. The same thing happened when prices elevated in Korea and Taiwan, moved to China. And it's difficult for us now to source product in China, not because necessarily the tariffs, but because the pricing there is at a disadvantage against other markets. Now, when we throw tariffs on, of course, there's a big focus on fleeing the Chinese market to other sources in Southeast Asia, including Vietnam, Indonesia, and others, and those prices are going up there. So ultimately, the consumer is going to be paying a significantly larger component of the cost of the goods that they buy in tariffs and in taxes. And there's elasticity in this product, as there is in everything. So we're going to see, the risk of a reduction in revenues on these product commodities based on their pricing.
Well, that's what I wanted to ask you, Tim, is a lot of indications lately have told us the U.S. consumer is in great shape, including the second look at second quarter GDP this morning. Do you feel that you have the pricing power, that consumers can actually weather a price increase as these tariffs go through?
Well, we will be raising prices on products to accommodate the tariff. We have prices built in for tariffs and have had, as I said, since the 30s. But the U.S. consumer is not an all strong, has tremendous strength. There's volatility there. And if they see that the business that they work for, if they're making John Deere tractors or if they're selling soybeans, or if they're a farmer, they don't have unlimited capacity to consume. And these people are fragile in many cases. So I don't think we can expect that the U.S. consumer has the unlimited ability to continue to buy products at any price.
Tim, you mentioned that looking elsewhere to source products in Asia is something that might incur higher costs too, simply because pricing has moved in those areas. The impression that given by some is that it's a relatively fluid process. In other words, not too difficult to reallocate manufacturing. What is your experience with that as a general matter? Is there capacity outside of China that could accommodate this type of activity?
Well, as I said, production for consumption in the U.S. has naturally moved to other countries over the last, call it, 10 years. This is not easy to do, to move these product categories. They're highly technical. They require significant investment in education for the employees making these products. There's structures around the engineering that go into the garments and the footwear. And then there's the raw material components that are required to build these garments. And you cannot just flip a switch and move these products around. There's other issues, including logistics of ports and roads that exist or don't exist in some of these markets. And to think we can just flip the switch and move it around is just ludicrous.
Yeah, but you do, obviously, as you pointed out, you manufacture in almost 20 different countries already. Can't you just move some of the workload from China to other countries that are already producing similar products?
We've made moves over 10 years, but not in 5 minutes. It takes years to get these things up to speed. And now we've got competition from other brands and other suppliers that are running away from China to try and capture space that we've been using.
And what about the market in China for your products? Obviously, we've indicated you import to the United States from China, but you also are a major seller in China itself. How's the Chinese demand these days and the consumer there?
The Chinese market is growing more rapidly than the U.S. market, the economy. We've had a few challenges in China, mostly of our own making, but we think this is the biggest opportunity for the company. The biggest geographic opportunity is China.
So, totally separate topic, Tim. A few months ago, your big competitor, Patagonia, really cracked down on those popular corporate logo vests that we see all over Wall Street and Silicon Valley. Have you taken that as an opportunity? I mean, they were concerned about the values and environmental standards and all sorts of things of these companies. Is that something that you can pick up?
Well, we don't have the kind of thought process in terms of who we want to have wear our products. We're a very democratic company. We'd like to have everybody wearing our products, and individuals who have particular political bent or particular economic bent, that's their own business. And if they want to wear our stuff, we'd love it. If they would rather not wear someone else's, that's okay too.
Right. And finally, have you cut investment, or are you cutting investment in some way as a result of perhaps trying to save on margin, getting prepared for the tariffs that are coming?
Well, here's what we're doing as it relates to investments. We focus on where the rule of law exists. And when we look across the globe, we're very concerned about the rule of law here in the U.S. and making investments that may be a waste of money for our investors. So we're looking when we're getting ready to invest in places where we can have surety that the business environment will be the same and that the rule of law and not the rule of Twitter will be running the business.
Mr. Boyle, we appreciate your taking some time with us, as you have in the past as well. Look forward to speaking to you again in the future. Thank you.
Thank you.
Tim Boyle from Columbia.
When we return, other big retail names to watch after reporting their earnings and preparing for the new round of tariffs. We're going to go through the numbers and the mixed reaction on Wall Street when Squawk on the Street comes right back.
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
If it isn't dead, if it ever comes back, we'll come back to.
On September 6th.
It's me and the Losers Club has officially begun.
They're back, and so is he.
We didn't stop it. The clown.
Starring James McAvoy and Jessica Chastain.
For 27 years, I dreamt of you.
See how it all ends.
I craved you.
It, Chapter 2.
I missed you.
In cinemas September 6th. Book tickets now, rated 15.
Hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids, with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Dad, I'm bored.
Why don't you go and start your holiday homework?
Don't worry, we've teamed up with Disney to bring you loads of exciting activities to keep the kids entertained this summer without even having to leave London. Make the most of the sunshine. And go play pool games at your local swimming baths, inspired by Disney Pixar's Toy Story 4's Ducky.
Yay!
Look online for Asda Tour de Fun for even more exciting activity ideas. Go discover your fun side with Asda.
Retail names reporting earnings this morning. Mixed reaction. Best Buy sinking after missing sales estimates and bracing for the new round of tariffs to impact their core products. On the opposite end of the spectrum, you've got Dollar General, Dollar Tree, and PVH all higher on their results. But Abercrombie & Fitch now down double digits after cutting its full-year sales forecast. Joining us on set for more on these names is our own Courtney Reagan. Good morning.
Hi, good morning, Sarah.
So a lot of threads through these earnings, but it seems like the tariffs are finally starting to be embedded in the forecast.
Exactly, and I think that there are a lot of threads going on, so you have to really sort of drill down and see what's going on. Because in some cases you have a mixed quarter, but then you have raised guidance. So some weak trends now, but some hope for the future. Then again, you've got an Abercrombie, which doesn't really see any improvement in this current quarter, even though they said back to school was strong. So some sort of mixed signals there. The Dollar Tree, Dollar General group, they think that they've really effectively mitigated a lot of the costs of the tariffs. That being said, Dollar Tree does say, look, the guidance doesn't include the most recent increases that we heard late that Friday. That part they're still trying to figure out, but up to this point, they feel like they have mitigated things. PVH, like you said, had really good results, but really weak guidance. They're worried about tariffs, the trade war, international tourism, protests in Hong Kong. So you really got to do your homework if you're looking to invest in any of these names, because there's a lot going on here.
It's been so hard to look at this group, the publicly traded companies, and decide what kind of shape the consumer's in,
Yes.
right? Because so many of the businesses themselves are just having challenges for reasons besides the fact that the consumer is not in good shape. Are there any themes you can pull out in terms of where traffic was good, what categories are working and not?
Yeah, so again, I think we keep talking about it, but it just continues to be true that traffic in the mall is weak. You know, we're talking about a possible Forever 21 bankruptcy, weakness at Abercrombie, so those are some big mall names, of course. Best Buy is doing a little better, and they are this sort of last man standing as the singular consumer electronics player. They actually had a relatively good quarter. I know it was mixed, but if you look into the details, it was relatively strong, and they had a good online sales number and good margin, especially with that Prime Day included in there, which is something some analysts were impressed with. So I think those mall players are still weak.
Although Best Buy, just to stop you for a second,
Sure.
is down sharply.
It is.
Now, we've talked about it. They lowered the top of guidance and the top of comp store sales
They
guidance.
did.
Is that what's behind this?
I think that's part of it, and it was the first time that we heard from Corey Berry as the CEO for Best Buy, and I think she did a really nice job trying to address, frankly, the uncertainty around the tariffs and around the impact, not just on the cost for Best Buy, but what it means broadly for consumer spending. She said, look, we're sort of doing our best, but it's a moving target, and if consumers in general start spending less out there, that's going to lead to some uncertainty here going forward for our forecast.
Well, I think the other thing is you look at a Best Buy versus a PVH, totally different setups into earnings. PVH was down almost 20% for the year. Best Buy was up almost that much. So
that's right.
It distorts it a little just to look at today's reaction.
It does. And then going back to your previous point, Sarah, PVH had said last quarter, look, so far the trade war isn't impacting us. We're worried about tourism, but the trade war isn't impacting us. This quarter, they're worried about it. And so things can change very quickly for these companies.
Courtney, thanks.
Thanks.
All right, Courtney Reagan. When we come back, the least responsible statement by a former financial official in decades. That's what Larry Summers said when calling out former New York Fed President Bill Dudley. We'll get the story behind that story when Squawk on the Street returns.
Is it time to put... Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike, and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet, and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Well, in an op-ed that has generated a ton of buzz on Wall Street, former New York Fed President Bill Dudley is arguing that the Fed should not cut interest rates further in response to President Trump's trade war with China. It's drawing sharp criticism from former Treasury Secretary Larry Summers, who called it, quote, the worst case of Trump derangement syndrome in the financial world. Larry Summers joins us now. I was shocked, actually, to hear your reaction to this, Secretary Summers, because you've been such a consistent Trump critic. So I would actually think that you would have applauded Mr. Dudley as in him calling on the Fed not to enable Trump in his trade war.
Look, the Fed's job is to stay out of politics. The Fed's job is to respond to the best assessment they can make of economic conditions and to adjust the economy appropriately, adjust interest rates appropriately. You can argue about what the right response is, that maybe more tariffs mean more economic weakness and that causes the Fed to ease. Maybe it means more inflationary pressure, which would point the other way. Those are all rational arguments. But for a trusted former official of the Fed, whose thinking is inevitably going to be tied to the Fed, to recommend that they raise interest rates so as to subvert the economy and influence a presidential election is grossly irresponsible and is an abuse of the privilege of being a former Fed official. So it was the taking of the economic dialogue out of the realm of economics and the putting it in a realm of politics and suggesting that the Fed was there and was acting politically or might act politically that was empowering the Fed's critics and I thought was profoundly disloyal to the Fed and profoundly inappropriate given his former roles.
And to your point, Tom Tillis, the U.S. Senator from North Carolina, is now calling for a hearing to look into Fed independence off the back of this Dudley op-ed. I mean, maybe the last paragraph went too far when he started talking about the election and maybe that the Fed should be prudent in how it acts as far as the outcome. But what about the premise that the more the Fed cuts rates in a strong economy, the more it does let President Trump and empower President Trump to put on tariffs, which hurt growth, and sort of implement this trade policy that you and so many others have been so critical of?
It is not the job of non-elected, appointed officials to a technocratic role to decide how they're going to act so as to constrain and influence the behavior of the President of the United States and the behavior of the remainder of the government of the United States. That is to misunderstand entirely the role of appointed officials in a democracy. You know, the analogy I used in one of my comments was to the military. It's for the military to describe what the military can and cannot do, and for the commander-in-chief to make the ultimate decisions about war and peace. It's not for the military to lie to the commander-in-chief or mislead the commander-in-chief or refuse to take the commander-in-chief's orders in order to pursue what they think is the best political policy for the country. That's why I referenced in one of my tweets the novel 7 Days in May. And I think the point is a very, very important one. And Bill Dudley is a friend, and I've admired many things he's done over time. But here, I think he was way off base, and I think the least he owes is to make clear that this was entirely his own thinking and that it bears no resemblance to his knowledge, or he has no basis for believing that any of the kinds of things he's thinking about are being considered or debated or are anywhere in the Fed's reflection process.
Mr. Summers, as for the Fed itself, by the way, worth pointing out, a body that you were close to potentially running. People may forget that you were almost Fed chairman. What do you think the response should be from Chairman Powell right now? A, to the trade war in terms of how he thinks about data dependency, and B, to the constant attacks that he's receiving via Twitter from the president on an almost daily basis?
I think Jay is doing the only thing he can do, which is to say that we're going to make the best decisions we can on the economy, and we're going to tune out politics and tune out the political noise. We're not going to be influenced by the political attacks, and we're certainly not going to decide our policy with a view to pushing the political process around. So I think he's got that exactly right. I think in general, data dependence is the right framework for the Fed. I think in some ways we've gone a little wrong in recent years with our emphasis on forward guidance and pre-commitment of policy and the like. It's an idea that comes out of some academic models, but in a world that's extremely uncertain, I think the Fed puts itself at risk when it tries to claim the ability to predict its own behavior down the road, when there always are shocks and surprises, often of a kind that one couldn't have anticipated even as possibilities, that need to influence the path of policy. But I think in general, we're going to look at what's happening to real activity. We're going to look at what's happening to the forecast and the recession risk. We're going to look at what's happening to financial stability. We're going to look at what's happening to inflation, and on that, we're going to calibrate our decisions. I think that's really the only viable way to make monetary policy.
Well, it would seem that were Fed officials to come out and reassert that that is their focus and that is how they make decisions, and presumably if we do get hearings in the Senate, Powell and others, his colleagues, would probably say that. But do you think that that's going to be enough right now? Can the Fed get back to a place where people have a presumption that it is politically independent and can operate that way, given the pressure having come from the president and now this message from Bill Dudley?
I think it's gotten harder than it was. I believe over time, credibility isn't asserted; it's won through actions. And I think if the Fed pursues policies in a thoughtful way, it explains the decisions it's made, I think it will be able to maintain credibility as an institution in American life. I do worry about another aspect of the Fed's credibility. I have been very troubled by Vice Chair Quarles' efforts to roll back regulation and roll back protection and be substantially more sympathetic to the banks at a time when, many years into a recovery, that's always when the dangerous lending starts. That's always when the problems set hold. And we are falling into the oldest pattern, pro-cyclical deregulation. And I think it's a serious mistake. And I think some of the issues he's addressing, having to do with capital and permission for risk-taking and giving, one of the first things you learn as a professor is you can't tell the students exactly what's going to be on the test, or it doesn't really work. And they're giving the banks so much guidance and so much role with respect to the stress testing that I have to say I don't think the Fed's current stress tests have a great deal of credibility. And I'm disturbed that others within the system are not exerting more pressure with respect to some of the changes that Governor Quarles, with the strong encouragement of the president, is supporting.
Right. Finally, when you were running Treasury, did you ever consider the issuance of a very long-dated bond, as seems to be the case now, 50 years or even perhaps as long as 100? And if you did, or even if you didn't, what is your sense in terms of the market reception to something like that, or why it might be a good idea or not?
I haven't fully made up my mind, and it depends on a rational judgment depends on a lot of data that I don't have at this point. I would caution in two respects. First, issuing very long-term bonds is quantitative tightening. It is increasing the stock of duration that the market has to hold, which pushes up long-term rates. If the Fed buying long-term bonds is thought to be stimulative, the Treasury issuing super long-term bonds must be contractionary. So I find it bizarre in the extreme that an administration that is beating all up on the Fed for not doing quantitative easing would itself be contemplating an exercise in quantitative tightening. I think the second thing is that there's a fair amount of rather technical sets of reasons to believe that these ultra-long bonds are not likely to be very attractive in the marketplace, and therefore are likely to carry high prices, and therefore are not advantageous for taxpayers. You know, if you're a restaurant, you have to decide what size the portions are going to be. And you'll make the most money as a restaurant if you choose a kind of portion size that fits the sweet spot of your consumers. And I'm rather skeptical of the idea that 50 or 100-year bonds fit that kind of test with respect to the marketplace. But I think we need to see what analysis the Treasury comes up with. And look, market participants' chatter on this is sometimes wrong. I was honored to have helped introduce the indexed bond. There was a lot of criticism when we did that from market participants saying there really wouldn't be demand for index bonds and the like. And it turned out that it's been a very successful program for the Treasury. So I don't want to prejudge it completely. I do think we're owed an explanation for why we bash the Fed for seeking to shorten the duration structure of the debt outstanding, and then the Treasury proposes to do something that lengthens the duration structure.
It's a really good point, one that I have not heard. Larry Summers, thank you very much for joining us, former Treasury Secretary.
Thank you.
As we go to a break, let's get a check on the markets. Down off the highs of the morning. We just backed off a little less than 0.5%. If you want to look at the S&P, down now up 213. S&P still up almost 0.9%. NASDAQ outperforming. More Squawk in the Street when we return.
When my business started offering online purchases,
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
If it isn't dead, if it ever comes back, we'll come back to.
On September 6th,
This meeting of the Losers Club has officially begun.
they're back, and so is he.
We didn't stop it.
The clown.
Starring James McAvoy and Jessica Chastain. 27 years, I dreamt of you. See how it all ends. I craved you. It, Chapter 2.
I missed you.
In cinemas September 6th. Book tickets now, rated 15.
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
For our half-price sale on a choice of floors and beds. For first-class free fitting, Carpet Right. For life. Offers end Tuesday. Free fitting on selected carpets and vinyl with selected underlay. Minimum spend applies.
One top strategist says if the market returns to this level, it would mark a major buying opportunity. Find out more on tradingnation.cnbc.com. More Squawk on the Street is coming up.
Okay.
No. No. No.
What are you doing?
I don't like any of our preset radio stations. We need a new car.
With the Jaguar E-Pace at $299 a month on personal contract hire, you'll find a reason.
That's better. And it's a Jaguar.
Initial rental £3,588. 48-month term. Subject to status. 8,000 miles per annum. Excess mileage and return conditions apply. No ownership option. Ends 30th of September. Participating retailers only. Jaguar contract hire.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
President Trump wants lower interest rates, and he hasn't been shy of his criticisms of Fed policy or Chair Jay Powell. Our next guest name was once floated by Trump to serve on the board of the Fed. And joining us now, former BB&T chairman and CEO and current executive in residence at the Wake Forest School of Business, John Allison. John, good morning. Good to have you here. Not an easy job for the Fed at the moment. We have a meeting in 3 weeks. The bond market, inverted yield curve, seems to be saying the Fed is too tight. But we also have to, I guess the Fed feels it has to filter in current data and implications of the trade war. So what's the correct policy, short and long term, for the Fed right now?
Well, good morning, and I think that's a very difficult question for the Fed. I think the challenge for the Fed is that they have discretion to kind of arbitrarily decide these things, not within the context of their models, but their models are modified to fit what their intuitive judgments are. I have strongly been an advocate of the Fed having some kind of rule. I personally like a nominal GDP rule or a money supply rule. It's interesting, in both cases, nominal GDP and money supply growth, looking at M4, have been pretty healthy in the 4.5%, 5% range. And neither one are saying, hey, you ought to be cutting rates aggressively. Now, a minor rate cut, which I think the Fed's going to do, is not really going to make that much difference. So I think we're going to see a minor rate cut, but I don't think the real economic phenomena suggest a major direction of lower rates. And by the way, I want to emphasize something you were just talking about. I think this message from Bill Dudley is scary. People should think about the awesome power of the Federal Reserve. When a recently retired member of the Federal Reserve decision says, hey, we can influence political elections, and they can. They know that. Whether people will say it openly, and I think the Fed will deny it openly, somewhere in the back of their mind, they know that, and that's one of the reasons we need a rule. We need a rule because it creates less ambiguity in the markets, and also it puts control in the Fed itself. Human beings are human beings, and the temptation to get involved in the political process when you're under political attack is pretty large. And I think people ought to be concerned about that implication.
Yeah, that seems to be most of the reaction to Dudley's comments, although I suppose you still need humans to set where the rule is. If you thought nominal GDP targeting at 4.5% is the correct rule, that would mean maybe the Fed doesn't do much of anything in September or beyond, or not at least more than a quarter point. The bond market seems to think that's not appropriate right now. Do you think the yield curve does not have implications for this?
I think the yield curve is an indicator, and I'm always concerned about that. And maybe you have to have a more sophisticated rule than just nominal GDP. You may have to have some additional characteristics to it. But I think the rule within a pretty small range would be better because markets could then anticipate where the Fed's going. And I think there's a limit on what monetary policy can do. I mean, the fact is that it's real production, real goods and services that matters. And you got to look at physical policy. So I think it's, when you don't have a rule, when you don't have some kind of controls, the temptation is for the Fed to try to do a lot more than it's really capable of doing, and for markets to expect it to do more than it's capable of doing.
John, just curious about whether you're having these conversations with anyone in the administration. I remember when President Trump got elected, your name was out there as someone who could potentially join the Federal Reserve Board. Is that still in contention? Are you still in touch with the White House on some of your strong views on this?
I've expressed my views, but I'm really not interested in joining the Federal Reserve right now because I think it needs more change than the people that are involved with it are willing to be to do, and I don't want to be sanctioning something that I don't really agree with.
Yeah. All right, fair point, John. Thank you very much for checking in with us this morning. Appreciate it, John Alice.
Thank you.
Squawk on the Street's going to be right back as you take a look at the S&P, up 0.84%.
I don't know what's going on.
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
There are certain things in life we simply don't talk about, and hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Live big and spend less on the brands you adore, and dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Dad, I'm bored.
Why don't you go and start your holiday homework?
Don't worry, we've teamed up with Disney to bring you loads of exciting activities to keep the kids entertained this summer without even having to leave London. Make the most of the sunshine and go find critters using the Ultimate Woodland Guide, inspired by Disney Pixar's Toy Story 4's Ham. Look online for Asda Tour de Fun for even more exciting activity ideas. Go discover your fun side with Asda.
Later today on Closing Bell, all over the markets as always to see whether this rally can hold into the close. We lost a little bit of steam, but still almost 1% gains across the major averages. Plus, we will speak with one of the reporters who broke the Wall Street Journal story about Amazon's new New York City burn book. Did you guys see this?
Yeah.
Mean Girls. And more earnings rolling in after the bell. We're going to hear from Dell, Ulta Beauty, Workday, and Marvel. Huge show, 3 p.m. Eastern. We'll see you then. Meantime, Dow's up 219. Squawk Alley is up next.
For our half-price sale on a choice of floors and beds. For first-class free fitting, Carpet Right for life. Offers end Tuesday. Free fitting on selected carpets and vinyl with selected underlay. Minimum spend applies.
Chloe, is that you? Still lugging that old laptop round your lectures?
No, my name's not Chloe, it's Claire. No,
No
Clarissa.
one wants to be seen with an old laptop at uni. Ask Curry's PC World about a new one, like the stylish HP Envy with its lights-in design. Only $749. Plus, save £100 more when you trade in your old qualifying laptop.
Nice new laptop, Chloe. Thanks. It's Chloe, like the goddess.
Save with instant trade-in at Curry's PC World. In-store only. See website for laptop trading qualifying criteria and evaluation.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
First world problem number 346.
Well, you know, people might think I'm exaggerating, but since Virgin Atlantic announced their sale, I can't sleep. 1 minute my head is in New York, the next I'm searching for shows in Vegas. I can't stop. So many choices. South Africa, the Caribbean, California. My search history is a total mess. Oh, I might need to bring it up with my life coach.
Seriously? Get a flight. Bing bong. The Virgin Atlantic sale is now on. Visit virginatlantic.com and fly direct from London.
Got a big tidying job lined up? Get to Trade Point. You'll find brand new tidying ranges at great prices, like shaded slate anthracite stone effect porcelain floor tiles for just £13 per square metre. So, to check out the brand new range in full, get to Trade Point or go to tradepoint.co.uk. Pack price £14.04.
Oh no. 1 kebab, 4 cabs, 3 karaoke booths.
But really?
You can't always recall what you spent on a night out. But you could map the location of those transactions on our mobile banking app. Feel in control every day. Lloyds Bank, by your side. Not available for every transaction. T's and C's apply.
What's that, Britain? You want unlimited data? Oh, you want more. You want it on the unstoppable, unbeaten, unrivaled #1 network? Well, who says you can't? Get unlimited data on EE today, the UK's unrivaled #1 network.
Unlimited data, personal use only. Terms apply. Root metrics comparison of 4 mobile networks H2 2013 to H1 2019. See ee.co.uk.
Good morning. It is 8 a.m. at Apple headquarters in Cupertino, California. 11 a.m. here on Wall Street. Squawk Alley is live. Welcome to Squawk Alley. I am John Ford alongside Courtney Reagan and Wilfred Frost. Live from Post 9 at the New York Stock Exchange. Carl and Morgan have the morning off. Stocks in the green led higher by tech this morning. The NASDAQ is on pace for its largest weekly gain in more than 10 weeks. But with today's move to the upside in a sector largely exposed to China and ahead of another round of expected tariffs in just a few days, where should investors be looking for protection? Joining us now to discuss, Oakmark Fund portfolio manager Bill Nygren and NZS Capital co-founder Brad Slingerland. Guys, good morning.
Morning.
Good morning.
Brad, you have some thoughts specifically around where is a good place to put money at this point, specifically as it relates to regulation coming down the pike and semiconductors. Give us a sense. Start with semis.
Sure. So, we think there's no more interesting spot in the tech sector today than in the semiconductor segment, particularly for long-term focused investors. We know there's a lot of noise and a lot of volatility around the trade war and the trade talks that are going on now. I think ultimately we're entering sort of an AI Cold War phase between the West and China, but that China and the Chinese economy can't exist without semiconductors, and frankly, the entire global economy now runs on semiconductors. Everything we talk about that's happening on the innovation front relies on these AI chips from companies such as NVIDIA, relies on these chips like microcontrollers from a company such as Microchip. And these are largely US intellectual property. And ultimately, China needs these, the world needs these chips. And they're priced because of the volatility in the market as though they're heavy cyclical and not going to grow. But we think that's just fundamentally not true with the big growth that's coming for semiconductors over the next decade.
And Bill, I look at your top holdings. I don't see semis having much of a presence. You've got more banks, some other types of stocks. You have a different take on where people should be positioned now, I take it?
Well, at Oakmark, we're long-term value investors, and that's not been a fun spot to be the past year or really the past 5 years. And that's because the spread in market PEs has just gotten wider and wider. We're at almost unprecedented levels now where the lowest PE stocks are half the market multiple today. And that lowest sector is full of banks. You know, we have Citigroup, Bank America, Capital One, Ally Financial. They sell at 7 to 9 times earnings. They sell under book value. Most of them are repurchasing a lot of stock. Dividends are higher than 30-year bonds. We think as value eventually makes a comeback, the financial sector will lead the way.
Bill, that seems to make sense, I guess, on some of those metrics. But if you're looking at interest rates potentially going lower, net interest margin can't be too attractive for a lot of those banks.
I certainly agree with that short term. But one of the things about the way we invest at Oakmark, we're trying to figure out what a company's likely to earn 5 to 7 years from now. When you look out that far, I think it's fair to guess that interest rates will about match the inflation rate. Our guess is about 2% on that level. And that's plenty high for these companies to get good net interest margins.
Brad, within the media space, do you feel like the consolidation in the U.S. is over now that we've seen CBS and Viacom tie up?
Well, I think we could see further consolidation in media. And media is an area that we're very bullish on for the long term. We think that the content producers are becoming more important. They're taking back control of their direct relationship with their customers through streaming, and we're entering this period where these consolidation with the media studios, they can both have their cake and eat it too. There's a manageable decline in traditional TV subscriptions that's being more than offset by direct-to-consumer streaming. So Disney is extremely well positioned. We think the combined CBS Viacom will also be very well positioned, and we don't think that's going to come at the expense of Netflix or some of the other streaming properties. We think consumers have a large budget to spend on video, and it's not shrinking, and they're getting more and more value for that budget. And so it's a really positive setup for the long term for media.
Bill, how do you see the narrative in media and distribution playing out? I see you've got Charter as one of your top holdings, our parent company Comcast as well. The combination of media and distribution was a big story over the past few years. Do you expect that to shift over the next 5 to 10? What's going to determine who has the most value?
Well, we think of both Charter and Comcast as primarily internet providers, and they currently have by far the most reliable, fastest speed internet, and we think that will continue throughout our investment time horizon. I think a lot of investors worry too much about cord cutting. Providing video just isn't that profitable for the cable companies. They make their money from providing internet service. And with the growth in streaming, we also own Netflix and Alphabet, two of the largest streaming video companies, and not valued at all as highly per hour watched as the traditional media companies. We think streaming is going to keep growing, and it will benefit all of those companies.
All right. We will see how this plays out. Bill, Brad, thank you.
Thank you.
Now, Apple CEO Tim Cook has long said that China tariffs would hurt his company, and a new Reuters analysis helps explain why. The report, which examines Apple's supply chain data, shows a company which is increasingly dependent on and intertwined with the Chinese economy. Joining us now to explain, Reuters reporter Stephen Nellis. Stephen, good morning to you. Thanks for joining us.
Thanks for having me.
So an increasing dependency in terms of supply chain on China. Gauge for us the numbers and the level with which that's increasing.
Absolutely. So Apple has thousands of suppliers, but every year they publish location data for about 750 plus of those. And what we did is went through about 5 years of that data and analyzed it and found that a little between 44 and 45% of those suppliers were located in China as of 2015, and then as of 2019, that actually increased to almost 48%. And the really interesting thing about that is, while they've added a few factory locations where they assembled the products in places like Brazil and India to deal with local tariffs, most of the new locations for factories have been in China. Foxconn alone went from having 19 facilities helping supply Apple to having 29 in that same time period, and that's right around the time when they've introduced new products like the Apple Watch, AirPods, HomePod. And so what we see is that Apple is really relying on China to help it deliver those new products, and that trend hasn't lessened even as the trade war has heated up.
But Stephen, what portion of that is in terms of the costs of, say, an iPhone? So 40 to 45% of the suppliers by number, but is that of the low-cost parts or the high-cost parts?
Well, that's an important thing to put the finger on, because only about 2 to 3% of the value of the phone is in assembly, and a lot of those really valuable parts, things like screens, things like some of the most important chips in the phone, are actually made in places that aren't China. A lot of the chips come from Taiwan. Some of them are made in the United States in places like Texas or Colorado, and a lot of the screens come from places like Korea. Japan is also a major country that supplies a lot of these parts. So it's absolutely correct to note that while a lot of the number and volume of suppliers are in China, some really high value parts are coming from outside of China.
Stephen, how thoroughly were you able to dig into how country of origin is determined? The circuit board, I understand, where that's made is a major factor in determining that. So, I mean, even if a lot of the parts are sourced out of China, will it necessarily be determined as a product made in China and subject to the maximum amount of tariffs?
That's right. So throughout the consumer hardware chain right now in tech, everybody's looking at this issue of what constitutes country of origin for the purposes of a tariff, which is actually, legally speaking, slightly different from what it might say on the box. And one of the things that a lot of companies are looking at is, where are the circuit boards made? You take a handful of chips that could be made into anything, and once you affix them to that circuit board, they've kind of become a product, and that could count as what the folks who do tariffs call substantial transformation, which is the key legal standard for deciding whether it's going to face a tariff or not. So that has at least some companies looking at how they could shift this around. For Apple itself, we don't know exactly what they're going to do. We do know that some of their suppliers, like Foxconn, have the ability to make those circuit boards in other countries like India. But the thing to remember is that in China, Apple is making hundreds of millions of devices a year. That's about 600,000 plus iPhones a day, only holding on to maybe 5 days of inventory at a time. Getting the scale and velocity of supply chain anywhere else but China is going to be difficult, even if Apple and its suppliers have the ability to do stuff like make circuit boards in other countries.
And Stephen, that brings up an interesting point, because of course Apple does do some manufacturing in India and in Vietnam, but your point is that they just can't scale the volume that is done in China to move any of that substantial manufacturing. And that's the manufacturing that's largely for the devices sold in those countries. Is that right?
That's correct. So in Brazil and India, for example, those factories were very specifically opened in response to import duties and tariffs in those markets. In the case of India, it's one of the last remaining fast-growing markets where people are adopting high-end smartphones like the iPhone at a rapid pace. Apple really wants to be there. They're pretty steep tariffs, though, up to 30% in some cases if you don't source some of your supply within India. So they've put those factories there to supply the local market, but you've got to remember their market share in India is tiny as it is because the phones, even without tariffs, are still very expensive, and it's still small, just one market compared to Apple's global market of hundreds of millions of devices a year. And so those factories, while they exist, they're really just meeting local supply.
But, Stephen, it seems important to note, with the amount of lead time that Apple has before December 15th in this case, even though Tim Cook famously hates inventory, thinks it's evil because it just kind of burns a hole in your balance sheet, they've got time to build inventory if they want to, for the sake of serving the U.S. market that would be subject to tariffs, if they determine that that's a sort of one-time thing that they would want to do and mitigate the effect of these tariffs, right?
That's right. So remember, their fiscal first quarter encapsulates the holiday shopping season in the U.S., and President Trump specifically moved some of those tariffs to December 15th on the idea that it would allow U.S. companies to get most of that inventory onto U.S. soil. Now, for most companies that don't turn their inventory that quickly, December 15th to kind of the end of the holiday shopping season seems like plenty of time. For Apple, we know they hold it for as few as 5 days, so you are left wondering whether they would actually be able to get it all in by then. But this is a very sophisticated company. It's a rare case where the CEO himself actually built out a lot of the supply chain, and it's probably true that if they want to move that up, eat a little bit of inventory cost to respond to this one-time situation in their fiscal first quarter, which is typically the biggest, they probably can. Right now, they are in the big ramp. We'll probably see a new iPhone announcement sometime in the second week of September. So they're already getting those phones ready and getting those processes ready right now. And it's yes, very possible that they could do a little shifting of how they normally handle inventory to respond to this one-time event in a big quarter for them.
Stephen Nellis, thanks for joining us.
Thank you.
Well, when we return, another big day for retail earnings with Best Buy, Abercrombie & Fitch, Dollar General, and Dollar Tree all reporting this morning. We break down the winners and the losers of the retail earnings season so far. Stick with us. Squawk Alley will be right back.
Here's some good news. At Romans, you can rent your next home from just £36, plus your first month's rent. No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
Hemorrhoids. You talk to your GP, but you don't really get anywhere because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search Combo Offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way. And give yourself a different day. At Gunwharf Keys. Waterfront outlet shopping.
Strings and things. Strings and things. Strings and things. Strings and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Well, Best Buy on pace for its worst day in almost a month, and that's after quarterly financial results came in mixed. The retailer gave disappointing sales and earnings guidance here. So joining us now, UBS retail analyst Michael Lasser. He has a neutral rating on the stock and a $66 price target. Also with us, Anthony Chikamba, Loop Capital Markets senior research analyst. He has a buy rating on the stock and a $90 price target. Gentlemen, thank you for joining us. Anthony, what do you make of the quarter today? It was mixed. There were things to like and there were things to be disappointed about. How do you put it together?
I feel like Bill Murray's character in Groundhog Day. I feel like this happens pretty much every single time Best Buy reports earnings. These were not mixed results. These were good results. Comp store sales came in a little bit light of expectations, but that was against a very difficult year-over-year comparison. Operating margin was up 20 basis points year-over-year. EPS was up 19% year-over-year. Beat consensus by 9 cents. And the earnings guidance for 2019, they raised it. So I just don't really see any reason for the stock to be down 10% today. From my perspective, this is a buying opportunity. I am pounding the table with both fists.
Okay, that's a pretty strong answer. Michael, do you think the stock is down because of the exposure to tariffs? I know it could be as high as 60% of their cost of goods sold, although CEO Corey Berry tried very hard on the call to say, look, it's not going to be that high. We have a ton of mitigation strategies in effect. But is that what the market is reading for this sell-off?
The market's reading a couple of factors for the sell-off. One, as you point out, there is a lot of tariff exposure. 60% of sourcing from China means that it adds a whole lot of uncertainty to the situation, particularly for 2020, because this tariff uncertainty is going to weigh on 2020 even more so than it's going to weigh on the fourth quarter of this year. And two, we did see some volatility in the product category trends, particularly in the gaming area. That seems to be softening at a very rapid clip. As a result, they had factored in a bit more caution into their fourth quarter outlook. I would also offer the perspective that it's going to be a very difficult holiday where we're going to be stacking two good holidays on top of each other. The holiday is actually shorter this year than in the past 6 days, so these retailers are going to have to sell more goods in a shorter period of time. And we're entering the holiday season very heavy on inventory. That's been a consistent theme across retail reporting. So we could see some of these retailers blink and make it a very promotional holiday season, which could impact a retailer like Best Buy disproportionately.
Anthony, are you unconcerned about tariffs?
It's not that I'm unconcerned. I mean, I'm more concerned about the uncertainty around tariffs than I am about the tariffs themselves. One other thing that I'll say about Best Buy is that, look, this is a company with a long track record of under-promising and over-delivering, and they have a new CFO. So clearly, they don't want to blow this guy up. They want to, have him beat numbers his first couple quarters out of the gate, particularly during the holiday selling season. One thing I'll mention on the holiday season, it's always promotional. It's always competitive. That's not new. And in addition to that, Best Buy now has a partnership with Progressive Leasing. They'll be able to offer lease to own during the holiday selling season. That will be incremental buying for Best Buy.
Michael, give us a sense, your take on how Best Buy is doing in this omni-channel world. I mean, the stock's been on a nice run since, mid-2015, arguably. It used to be all about Amazon's going to kill these guys, throw Target, Walmart in the mix too. All of them have developed strategies to at least counter that argument. And we're talking about Best Buy now having a bad day. It's actually not about Amazon, right?
Yeah. Best Buy is helping to feed the narrative that traditional retailers, the strong, well-positioned retailers, are fighting back, and they're going to survive over the long run. Best Buy in the quarter grew its online business 17%. It offers a range of fulfillment options, including buy online, pick up in store. If you order right now on thousands of items, you can pick it up within an hour. That's a very convenient offer that's tough to compete with for those who don't have the physical locations. So I think this narrative that Amazon's going to destroy all retail is false. The real narrative should be that what's happening in retail is the weak retailers are going away and the strong retailers are getting better.
And interesting to note as well in the quarter, the online sales, it was the biggest quarter for a non-holiday quarter. Actually, the Best Buy has put up, and that was with Prime Day. So they did compete well there. Thank you very much, Michael Anthony, for joining us today on Squawk Alley.
Markets back up close to session highs. All of the major indices up more than 1% as we stand. And one of today's biggest winners are the chip stocks. And Frank Holland has more on that from the NASDAQ for us. Hey, Frank.
Hey, Wolf, how you doing? You know, as we've seen those headlines about China staying calm in the trade war, investors have gotten excited about chip stocks, especially those with high exposure to China. That includes Qorvo surging more than 3.5%. The company gets an estimated 75% of sales in China. Skyworks also up more than 2.5%. That chip maker gets about 85% of its sales in China. Micron shares up 3.5% as well. Though that company getting about 55% of its sales in China. This also helping out transport. So you're looking at CSX. Those shares up more than 2%. You have to remember the CEO called the current freight environment puzzling. Perhaps a trade deal would bring a lot more clarity. Also, J.B. Hunt, those shares up more than 3.5%. J.B. Hunt is the nation's largest shipper of containers. This business has been directly impacted by fewer exports to China and, of course, the trade war overall. Back over to you.
All right, Frank Holland, thank you. And the Dow, meanwhile, looking for its third positive session in 4. Take a look on the screen at some of the names leading the index higher. We're back after a quick break.
The end. Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
Hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Strength and things. Strength and things. Strength and things. Strength and things. Strength and things and strings and things. Strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Dad, I'm bored.
Why don't you go and start your holiday homework?
Don't worry, we've teamed up with Disney to bring you loads of exciting activities to keep the kids entertained this summer without even having to leave London. Make the most of the sunshine and go find critters using the Ultimate Woodland Guide, inspired by Disney Pixar's Toy Story 4's Ham. Look online for Asda Tour de Fun for even more exciting activity ideas. Go discover your fun side with Asda.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
Welcome back. European markets set to close. Brexit headlines very much in focus. And Steve Sedgwick has the latest for us from London. Hey, Steve.
A Ferrari in Westminster. Unconstitutional? That remains to be seen. Unconventional? Absolutely. Yes, the measures taken by Boris Johnson to prorogue or suspend Parliament has taken many by surprise with its boldness. Basically, what will happen next is Parliament will come back the week of September the 3rd. It will have 3 or 4 days to fight against this proroguement, this suspension from the Prime Minister. Thereafter, there will be a suspension from the week of the 9th of September right through to when the Queen's speech is taking place in Parliament on the 14th of October. Will the opponents of Boris Johnson have manoeuvrability in that period remains to be seen. What are their options going forward? Well, a legal challenge may be a very tough call for many of them, but perhaps a no-confidence vote in Parliament could take place. Now, if that were to take place and the Prime Minister succeeds and has a vote of confidence, then, of course, he will get his way. But if there is a no-confidence vote against him, which is successful, then it can go either one of two ways. One, a caretaker government may well try to be put in place under potentially someone like Sir Ken Clarke from the Conservative Party, maybe a Harriet Harman, possibly even Jeremy Corbyn himself. Or indeed, they will fail to form a government, in which case the Prime Minister, Boris Johnson, could then call a general election, but he could call that for a date after the key Brexit date of October 31st. A lot of ifs and buts, a lot of questions about the Constitution, about convention, and about the legality of the very bold moves which have divided Parliament and divided the country from Prime Minister Boris Johnson. This is Steve Sedgwick in Westminster.
Thank you, Steve. Meanwhile, major indices in Europe about 1% higher as they're set to close. And now let's get to Rahel Solomon for a news update. Rahel.
Hi, good morning, John. So here's what's happening at this hour. Former FBI Director James Comey violated policy and his employment agreement by leaking sensitive memos that triggered the Mueller probe. This is according to the Department of Justice Inspector General in a report released this morning. Comey responded in a tweet defending his actions and drawing a distinction between sensitive and confidential material. The Justice Department has already decided not to prosecute Comey. Chinese state media releasing footage of military troops moving into Hong Kong for what they call a routine rotation. This is amid fears that the army will intervene in the ongoing pro-democracy protests. Jewel has announced that a new ID verification system has been designed to prohibit sale to underage shoppers. Jewel has said that more than 40,000 stores have committed to implementing the new standards and will not distribute to stores that aren't compliant starting in 2021. And Apple has launched a new repair program, allowing customers to fix their phone more easily. Independent repair businesses will now have the same access to tools and parts that are used to fix phones at the Apple Store. I'm sure a lot of people will be happy about that. And that is our CNBC News update for this hour. Let's get back to Squawk Alley. Well, I'll send it over to you.
Rahel, thank you very much. Still to come here on Squawk Alley, investors getting their first look at Disney's new streaming service. We'll ask Kara Swisher about that next. Meantime, getting a check on where we stand across the major averages. As we said, back near the session highs, up over 1% for all the major indices, led by the tech sector and the Nasdaq up 1.5%. We're back in a moment.
Franklin Templeton. Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent, with Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Strength and things. Strength and things. Strength and things. Strength and things. Strength and things and strings and things. Strings and things. Strings and things.
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
strings and things.
I didn't choose you. You chose me. When you broke from the crowd and pawed at my knee, soon you'll be feeling right at home. You'll be a bit unsure, but you're free to roam. What's good to chew? What's nice to nibble? Wet food, dry food, tin food, kibble? You might sometimes be cheeky, not always wise, but I know I found love in those puppy dog eyes. Join the free VIP Puppy Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/puppy club or join in store. T's and C's apply.
For our half-price sale on a choice of floors and beds. For first-class free fitting, Carpet Right for life. Offers end Tuesday. Free fitting on selected carpets and vinyl with selected underlay. Minimum spend applies.
There's a mouse in the house, according to UBS, or at least there will be. In a survey out this morning, the firm finds that nearly 80% of U.S. households have heard of Disney+. That's the streaming service. At least 43% intend to subscribe to that service, while saying that Disney's projections have been too modest. Of note, from the same survey, 57% would cancel an existing streaming service to make financial room, presumably, for it. We've had our first look at what's going to be on Disney Plus this week. And joining us now, Recode editor-at-large and CNBC contributor, Kara Swisher. Kara, good to see you.
Good to see you.
So I think a lot of people who we've had on air keep saying, oh, there's room for everybody in the streaming game. Netflix will be fine. Everybody will be fine. I don't buy it. I think somebody's going to take some lumps here. What do you think?
Well, we'll see. I mean, absolutely. I think people don't want to buy a lot of services. I don't know how you act, but I don't want to own like 6 or 7 services. I mean, you do have magazine subscriptions and things like that. And so people are used to it. But the question is, will they in practice be using this many services? So it's not a zero-sum game, but it's certainly, it makes people make choices that they have over their entertainment. And so the question is, will they switch over the way, say, people switched from Spotify to Apple Music and things like that? So it'll be interesting to see if that survey, which is very good for Disney, actually happens. And I think that's where I want to see if it actually picks up like that.
What's your take, Kara, as to whether once we get past this launch that we start to see content costs come down? And in a weird way, this competition for a company like Netflix could help in the medium or long term if that does actually materialize.
Well, I don't know. You'd like many more players in any kind of market because costs are great for consumers, and it's great, consumers get better prices. And on the content cost part, it's great for content creators that all these people are vying for their content. I think what happened is when there's this much fragmentation, though, it's going to be problematic for consumer choice. It's going to be problematic for these companies to figure out, and it's all going to be based on hits and the things people want to watch. And Disney, to its credit, has so much content. It sort of owns all the really great content. And the question is if it can keep producing more and not just, rely on evergreens. Because this has become, just like a lot of things, a hit-based business. And so if people are attracted to a hit like Stranger Things or whatever they're watching, or, it used to be, or Homeland on Showtime or something on HBO like Succession, that's really where the game is, the new and fresh stuff, which attracts people. And then they have to have the back catalog of things that are super popular.
Kara, I wonder if any of these services will eventually turn us to some sort of contracts. That's what we've had for a long time with cables, with your phone, where you sort of sign up and then you're kind of stuck for a while to kind of increase the stickiness. Yeah. You think that's at all a possibility?
Well, there's an interesting concept that Scott Galloway and I have talked about on Pivot a lot called Rundles, which are recurring revenue bundles, where you trust a company for a range of things. I think that's more in keeping with the idea rather than having stuff jammed together by a company like a cable company or something like that. Obviously everyone's used to that kind of behavior where you buy HBO or Showtime or whatever, and you don't really understand the pricing or anything else. So consumers are used to that, but it doesn't mean consumers like it. And, in this case, I think that consumers will sort of choose the things that's best for them. If they have small children, they'll obviously choose Disney more than other stuff. If they're younger, I'm guessing Netflix has a much younger demographic. So it'll be interesting to see where people settle. But I do think consumers are sort of in the driver's seat here on what they want.
I think there's a rebundling that's going to happen. I mean, we see Disney with this Disney Plus, Hulu, and ESPN bundle already. If that works, how can they resist finding other stuff to stick in there? Kara, I also wonder, who else is going to win here? Is it Roku? That stock has had an amazing run, but clearly there are going to be people out there who maybe haven't subscribed to Netflix up to this point or have done it in kind of a kludgy way just through a phone or a tablet, who are going to want to see this Disney stuff or these other streaming services on a big screen. How do you think they end up playing that? Is Roku perhaps due for another run or some other over-the-top provider?
Well, I think, if anyone that's offering a service that's really popular is going to do well if they're on it. I think you remember what happened when Netflix wasn't on Comcast and things like this. These things tend to settle out, and people that are sort of against each other decide that they want to be together in order to reach the consumers. I think eventually there will be sort of a coalescing around a few services. A few services that provide all the services, because I think for consumers, a lot of this stuff is not thinking about what consumers actually want. It's what's good for these companies. And I think the question is, how can they provide something that's a great price and getting what you want instead of having you have to pick, a la carte from everything. So definitely there has to be something that coalesces. At the same time, I think it should think more about how consumers behave so they can pick and choose what they want themselves, because that's the way the consumer is today. They're not sort of being, forced stuff that media companies force down their throats, kind of.
Yeah, and Kara, before we let you go, a little bit of a left turn. Rihanna, the artist, her lingerie brand Savage X Fenty receiving $50 million in funding this morning. It's another instance of the rush to back celebrity-fronted startups. Of course, Fenty, she's got that deal with LVMH as well. She's been quite the entrepreneur.
Yeah, it's really interesting. I'm always fascinated by this. The issue is how much staying power do these things have? You've been around a while. You've seen a million of these celebrity sort of oriented websites or different things. There's been so many of them. There was one a long time ago. It was a movie service with Matt Damon. I don't know where that went. So the question is, how much staying power do they have? And how much is the person involved in it, whatever the celebrity is. And so I worry a little bit about these things being faddish and then they move on to something else. It's really hard to build a brand and keep it going over time. That said, this area is so ripe for disruption. It's been dominated by Victoria's Secret. And, millennials and others are looking for a different thing. And so that's where the real opportunity is for a celebrity like Rihanna or anybody, any of these celebrities that have a really strong relationship with their fan base, essentially.
Yeah, and she has shown she's serious in cosmetics. Yeah. Now moving deeper into fashion. It'll be interesting to see how this goes. Kara, always good to see you.
Yeah.
Thanks.
Thank you.
Meantime, Apple's wearables could be hit by a 15% tariff in just a few days' time. Josh Lipton explains from San Francisco. Hey, Josh.
So, Wilf, that's right. Remember, there are a lot of fans of these wearables. Apple has now sold an estimated 80 million watches and 50 million AirPods. So how could Apple respond? Well, it could absorb the tariffs entirely. Analysts estimate that could cost the company $500 million. Or Apple could try and pass along price increases to consumers, though that, of course, risks denting demand. And, of course, Amit Daryanani is actually more concerned, he tells me, about levies hitting the iPhone, possibly coming December 15th. If Apple's hit with all potential tariffs, he says company could take a hit of at least $5 billion to its bottom line. And that is real money, amounting to about 10% of the company's free cash flow, he says. On the other hand, we know Tim Cook does seem to have friends in high places. President Trump recently praising Cook as a great executive and said Cook made a good case about why competing with Samsung would be tough if iPhones get hit with such import tariffs.
Tim was talking to me about tariffs. And, one of the things, and he made a good case, is that Samsung is their number one competitor, and Samsung is not paying tariffs because they're based in South Korea. And it's tough for Apple to pay tariffs if they're competing with a very good company.
Now, some bet that Apple, when it's all said and done here, won't be hit with tariffs, not wearables, not iPhones, that it will earn exemptions. That's Gene Munster's view. He doesn't think when push comes to shove that the U.S. government wants to penalize such popular products. Guys, back to you.
Thank you very much, Josh. It's a story we're going to continue to follow, a very important company. We will talk to the CEO of another headphone company, though, on the September 1st tariffs list. That in just a few minutes. But first, Rick Santelli, what are you watching today?
I continue to watch the long end. We're knocking at the door of 2% in a 30-year bond. The bond may hold the key to where the markets go. You want to know where they're going? Tune in after the break.
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
If it isn't dead, if it ever comes back, we'll come back to.
On September 6th.
This meeting of the Losers Club has officially begun.
They're back, and so is he. We didn't stop it.
The clown.
Starring James McAvoy and Jessica Chastain.
For 27 years, I dreamt of you.
See how it all ends.
I craved you.
It, Chapter 2.
I missed you.
In cinemas September 6th. Book tickets now, rated 15.
Hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to X-Royd. They specialise in a new, fast, safe and effective procedure for hemorrhoids, with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. X-Royd. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Dad, I'm bored.
Why don't you go and start your holiday homework?
Don't worry, this summer we've got loads of exciting activity ideas to keep the kids entertained without even having to leave London. Make the most of the sunshine and go on a bug hunt or even a treasure hunt and cool down with some homemade ice lollies. Look online for Asda Tour de Fun for even more exciting activity ideas. Go discover your fun side with Asda.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings and things. Strings and things. Strings and things.
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
I'm Scott Wapner. Here's what's coming up halftime before top of the hour today. We're debating whether this week's tech takeoff is the start of something bigger. Many say the market can't really get going again without it. So we'll discuss the stocks you need to own and maybe the ones you need to trim with a portfolio manager at Goldman Sachs Asset Management. Plus, our call of the day hits squarely in the tech space today. Our investment committee on whether this Apple supplier is worth a look. And NASCAR star Kurt Busch is in the house. We're going to talk fast cars, fast money, and what he is doing to give back to America's veterans. It's all at noon on the half court. We'll see you in about 15.
Sounds good. We'll be there, Scott. Let's get over to the CME now and Rick Santelli, because he's got the Santelli Exchange. Hi, Rick.
Hi, and good morning. You know, is it our problem the world just loves our securities? Like cake. They just love it. And the long-dated ones, not only are foreign buyers in love with it, institutions around the globe that need to match their future outflows, their liabilities, their payouts, insurance companies, annuities. Think about all the payouts down the road that need to be accompanied with cash flows. And then you look at the short end. Short end has the Fed, T-bill issuance everywhere in sight, especially right before and right after the budget deal. That's why Treasury Secretary Mnuchin thinking about an ultra-long bond is a wonderful idea. If they want to eat cake, let's give them some cake to eat, because all these issues I've described have hugely distorted the yield curve. So how do we get our GPS back? How do we know if we're getting close to a bottom on interest rates? How do we know when the global feeding frenzy that keeps the dollar firm and keeps treasuries well bid, keeping yields low, making it very hard to handicap? how our economy is going to behave when the rest of the world not only has the sniffles, in Germany's case, the thermometer's in the mouth, maybe a full onset of the flu. We're doing pretty well. The issue isn't the inverted curve domestically. It has now become a global signal. Why? Because it's global players that are giving us the signal. But ultimately, it could still be right, because the key point to discuss is how can we survive, and what would our rate of decay on growth be if the rest of the world keeps pushing us into negative yields and slower growth? Well, quickly, let's go to the board. It's all about the 30-year. Now, I did 3 charts here quick. Scale doesn't matter. Since August 1st, we've dropped like 60 basis points in a 30-year bond. So when you take 30s minus 10s, we call that the knob down here, notes over bonds. Of course, it got affected. The spread narrowed. It's coming back a bit. But the real key here is this chart. This chart goes back to June of 2016. Why? Because on July 6, 2016, right around the time we were making a double bottom around 136 in 10-year notes, we made only one bottom at 209 in 30-year bonds. And when we traded through that, this really accelerated. The point is, everybody now is looking, rightly so, at the double bottom in 12 and 16 on 10s. But the key may be the long bond, because if the long bond could get above 209 before 10-year note yields violate the double bottom at 136-ish, in my opinion, that's when we call at least a large bottom. Will it be the bottom? So watch 30-year bonds and pay close attention to the knob spread. Wolf, back to you.
Rick, if U.S. Treasuries are like cake, what are German bunds like?
Well, German bunds are getting to be less and less like the tastiest cake, because many fear that the ECB and the European economy are toying with too much debt. They're taking on too much in negative yields, and what are they getting for it? A weak currency and a crummy economy. And ultimately, Lagarde's going to have issues. There's issues of confidence and control. And even though they're still munching on those like cake, what about the inventory of all the southern central banks like Italy and Greece? What's going to happen with all these securities? That's an issue, and it is affecting the appetite of foreigners to even the high credit debt in Europe.
I like that you got crummy in there as well.
I was just going to say that. I like the
I'm not going to ask what gilts are like. Thank you very much.
Bun cake. Well,
exactly. There we go. When we return with the President's September 1st tariffs are now only days away, one of the CEOs with products on that list will join us to explain how it's impacting his business and what, if anything, they can do to prepare. Stay with us.
Stand up.
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
Hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way. And give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings and things. Strings and things. Strings and things.
Now, there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Welcome back. We are up at session highs, 351 points on the Dow, 1.35%. The Nasdaq still leads the charge. That's up a healthy 1.5%, as is the Russell. Tech, energy, and industrials lead the charge. Now, we're just a few days away from another round of tariffs set to go into effect on September the 1st. Headphone company JLab Audio, one of the companies on that list, expects a loss of 10% in gross profits overnight. Joining us now is the JLab CEO, Win Kramer. Very good morning to you. Thanks for joining us.
Yeah, good morning to you. And I wish it was 10%, but now we're at 15.
15%. So gauge for us, Win, what portion of your products are manufactured in China, and as you say, exactly how that's going to shake down on the bottom line.
Yeah, we have 100% of our products manufactured in China. About 90% of those products are on the September 1st tariff list. So a big portion of our business is going to be impacted come this Sunday.
100% of the cost also coming from China, or is this
yeah,
small
correct. 100% of the cost coming from China.
So talk us through your best-selling headphones. How much do they cost today, and will you be passing any of this increased tariff cost to you onto the consumer?
Yeah, so we have a range of goods. All of our products in the value segment, or accessible segment that I like to call it. So we price them from $50 to $150 in the U.S. market. And we do plan on passing costs on to the U.S. consumer, but we're taking a wait-and-see approach. And we think that's the prudent approach because we're seeing changes happen via tweet. I mean, look at a week ago Friday, I woke up and found out that our cost of goods were going to rise 5% in a week. And we had no idea that that was coming. So we think a prudent approach will be wait and see, but we're certainly going to take a hit on the profit side.
So prices might go up for the consumer in due course, but on September the 2nd, the price will be the same as August the 30th.
Yeah, it will be, at least for us. Now, some of my peers, I don't think, are as lucky. They didn't have as large of an inventory position as we did. But you're going to see the baskets of goods increase over the next 30, 60, 90 days as we get into holiday. And certainly, if your budget is $100 and you now have to spend $115, something's going to get cut from that basket.
So when obviously you sell your products at a number of retailers, including Kohl's, Best Buy, Walmart, and Home Depot, what are the conversations like between you and the retailers? Because a lot of them are telling us, look, we're having conversations with our vendors about how this is going to work, who's going to take on sort of what percentage of the cost increase. So what are they asking you to do? What are you telling them you can do?
Yeah, I think the conversations have actually been really well received by both parties, and we have good partners in the U.S. They're asking us for help, we're asking them for help, and we're trying to find ways that we can both trim costs to ensure the U.S. consumer doesn't get burdened as much. So if you think about it, all of the JLab products come with a charging cable that is 3 feet long. Can we trim that charging cable to 1 foot? We don't ruin the user or the consumer experience, but we trim a little bit of cost that we can pass on through. So we're trying to find some creative ways to make this happen, to work with our retail partners.
Win, how does the holiday season, you think, play out differently in a tariff environment? I mean, usually a couple of weeks before Christmas, you end up with some shifts depending on how good the demand has been, how steady the traffic has been. When you factor tariffs in, how do you think that impacts discounting in the calculations?
Yeah, I think discounting will not be as strong this year because there is a 10 to 15% tariff that manufacturers and retail partners are trying to absorb. So I don't think you're going to see the big discounts or as big a discounts over the Black Friday period as you've seen in the past. But like I said, if you had $100 to spend for holiday and now you need to spend $115 to get the same amount of goods, something is going to get trimmed, and we just don't know what it is because we've never seen this before and we don't have a playbook to follow.
Speaking of things getting trimmed, when you look at your company's business investment plans, have you had to make some changes now that we know these tariff costs are going up, investing in less, hiring fewer people?